US stocks are set to end the first full trading week of 2026 in positive territory, while the US dollar is also on track to book gains as investors have digested plenty of news flow surrounding US intervention into Venezuela, as well as mixed data. Now, to talk us through what we should be watching next week is Global Head of Content, John Kicklighter. Thank you for joining us, John.
Thanks for having me.
So, what are the general market conditions we should expect to be dealing with next week? And what are the markets that you will be watching?
So the market conditions are still very troubled. Troubled in that they haven't decided on what is going to be most important to drive the collective view. And we have a number of competing themes we could latch onto if the markets chose to, but I don't see clarity just yet. And we did have a run of meaningful event risk, as you mentioned, especially around the US, both in terms of scheduled and unscheduled. So we could dip our toes into any one of these at any time, but it's generally, I think, a dependency on which is going to crack some of these major technical setups. So I like to include technical analysis with the fundamental analysis, just to give a sense of where the critical levels are, where the tipping points are, and if there's strong momentum. There isn't strong momentum, but there is some really notable congestion. So if you look at something like the S&P 500, which has a very large wedge on it, near record highs, path of least resistance, probably a continuity of an existing bull trend, but there's no guarantee of that. And then if you look in, let's say, the FX world, the EURUSD, one of those liquid assets of the world, its ATR is the lowest we've seen since December of 2019. So a really clear reticence and congestion on that pair as well. We're looking for something to really tip the scales one way or the other, bullish, bearish. And bullish and bearish could be on risk appetite. Bullish and bearish could be on thematics. So EURUSD is not necessarily a risk on, risk off oriented currency cross. So we have this consolidation. We're getting out of the holiday period, but there needs to be some degree of guidance. And there's going to be another round of noteworthy event risk in the next week that can help along with that. But we exit this past week with non-farm payrolls, University of Michigan consumer confidence, some of those uncertainties around Venezuela that opened the week, and still no consistency. So the markets I'll be looking for: S&P 500, EURUSD for sure, dollar yen, which kind of spans the view of some of these macro themes and risk trends. Crude oil, as it reflects on Venezuela and some of the global uncertainties in geopolitics, and gold and silver, which continue to be some of the most active markets through the holiday and into the new year.
Excellent. So, John, let's talk about themes. What's on your radar? I imagine geopolitics will be a key theme, and obviously the Federal Reserve and rate cut expectations are also lingering and looming. But what are you watching?
Mm-hmm. So it'll come either out of the blue, our focus on theme, or it will come with the very delineated scheduled event risk. So I will be focusing on some of that scheduled event risk that we have over the coming week, which there's some very notable listings, but a low probability impact is probably going to be around monetary policy. But there's a couple things that would really spur that, particularly as it would around the interests of the Federal Reserve, and that will be CPI. So this past week's unemployment rate actually ticked down, which reinforces that pause from the Fed that they've taken at the end of 2025. But CPI is going to be one of those factors that says maybe they should cut if inflation drops more quickly, or if it picks up, then it can argue more of a hawkish cause. The countervening kind of influence is going to be headlines around who the president's replacement pick for the Fed chairman is going to be, who supposedly he has a person in mind. We're just waiting to see who that's going to be. Most likely going to be somebody that's more oriented towards rate cuts. So that's a theme that can take traction. I think a much more uncertain and loaded for volatility theme is going to be geopolitics, and that's after the Venezuela situation, we also have protests in Iran, which the U.S. president has weighed in and said he could do something about any kind of attacks on protesters there. And there's a lot more credibility given to those threats after Venezuela. But we also have things like the defense industries threats, as well as the defense budget calls from the White House, big changes and uncertainties, deficits, always a lingering concern, especially for debt markets and interest rates. So I will be looking for those geopolitics kind of being a bigger potential theme, but ultimately I'm looking for risk appetite. I'm looking for risk appetite either in the aggregate and universally, so all risk-oriented assets rising or falling in tandem, or I will look to see whether there's going to be more of a selective risk appetite. So if there's an appetite for, let's say, AI-centric large market cap stocks versus broader stock markets. So looking at a comparison of the NASDAQ 100 to the Dow or the S&P 500, I think that will be really informative about what kind of markets that we get and what kind of themes that we choose to connect to will really dictate that kind of consistency and risk trends.
And event risk. I mean, you briefly touched on CPI, but what are the top event risks for next week?
So in terms of event risk, Monday is very light. I mean, unless you're watching the WASD or the U.S. selling its 3 and 10 year bonds, that does carry some connotation for certain markets, but not global macro. I think it really kicks in on Tuesday. So Japan, which is going to, I think, increasingly be an interesting one through the first quarter. But the Eco Watchers report is there. That's an economic sentiment review. We also have the United States NFIB business consumer confidence figure, certainly worthwhile, as is the U.S. monthly budget, given the deficit concerns. But top event risk for Tuesday is absolutely U.S. CPI and the start of the earnings season with JP Morgan, the largest bank, and one just outside of the top 10 of market cap stocks. So that's definitely one to watch. And then Wednesday, we get into some Chinese event risks, some new loans figures and trade balance in the morning. And then we get into the U.S. session. It's going to be earnings, Bank of America, Wells Fargo, Citi. And from the event risk, the economic event risk is going to be U.S. retail sales. Thursday, you get some UK GDP and trade figures, industrial production. From earnings, I'll be watching BlackRock, the largest asset manager in the world, but I think a little bit more influential in this conversation of AI and tech is going to be TSM. So they're going to be giving insight into the semiconductor interest and appetite, especially as AI seems to be hungry for everything around it. And for macro event risk in the U.S. session on Thursday, I will also watch the TIX figures, that's capital inflows and outflows. Friday is relatively light industrial production, the NAHB housing market index. But do remember into Friday, as you're seeing that kind of price action, there'll be some significant anticipation for the early next week, and that's going to be Chinese GDP and the IMF's WEI economic outlook. So there will be some anticipatory influence to close out the week next week.
Well, thank you, John. Plenty to be watching out for. A pleasure to be talking to you once again.
Thank you. Happy New Year.
For more videos like this, please do like and subscribe.